Welcome to Personal Finance with George. Today we're lucky enough to have Nathan Strudwick from Elders Real Estate, Shayla Park, in the studio. Nathan is an award-winning agent who personally, in my opinion, has single-handedly increased the average sale price in the Logan area. Nathan today is going to give us insight on where the market is and where the market's going. Welcome, Nathan.
Thanks, George. Thanks for having me.
So, give us a bit of insight of where the markets are, what your personal views are, where the markets are moving, and also give us some tips and add some value to our audience.
Sure. So, last couple of years have been all boom, all good stories in real estate all over the country, really. And Southeast Queensland and Logan, I think, has been the golden child of Queensland real estate. I've sold some houses outside the area, and the houses in Logan have had more people attending at open homes and more people making offers. So it's been great. And it's from an agent to a client. It's like I've worn a cape for the last 2 years, and everyone's got what they wanted plus more. But we are going into this bit of a changing market. You know, we are really seeing the market change in 2022 due to a couple of things. We've got a lot more stock on the market. Buyers now, if you're a buyer in this market, you actually have choice. You don't have to make an offer sight unseen anymore because you've got time to look at it, because there aren't as many buyers looking at those properties. So there is more choice for them. And we're seeing probably a little bit of less activity coming up from New South Wales and Victoria. Those people who during coronavirus wanted to get out of lockdown, they don't need to come up anymore, because Sydney and Melbourne, they're out of lockdown. You know, they don't need to relocate to Queensland, so we've lost that part of the market. So that's what has been a lot of change in the market. So last weekend, for example, 8.5 people per open home.
That's shocking, because I know you've always got a line up the road.
Last year, 20 to 40. You know, last year 20 to 40, and this, like last weekend, was 8.5 people per open home. So there is a real change. So this is what I'd say to your customers, your clients in the market. There's going to be three of them. You've got three customers, really. They're going to be renters, buyers, or sellers. Renters, they're going to be in trouble still. It's going to be tough renting, and there is price. Because the property prices have gone up, the investors want a higher return on their investment, and therefore the rent per week's going up. So they're going to have it tough the next couple of years. Sellers. I'm saying to anyone in this market, if you want to sell your property, investment property or family home in the next 2 to 3 years, its highest price is going to be now. In fact, you've probably missed it. You've probably missed the highest price. But what would you rather do? Sell a property now on the eve of some interest rate rises, the eve of inflation going up? You know, the numbers were 5.1% 2 days ago on inflation. Or would you rather be selling your property when interest rates have gone up? There's been 3 or 4 consecutive interest rate rises in a row.
And this is a very important point to anyone who is looking at investing in property for the long term. Yes, if they're holding over the next 10 years with things that happen with Olympics, fine.
It's fine.
But if you are looking at cashing out in the next 2 to 5 years, this is the time.
Now's the time.
And I'm on the same page with you, and I do agree that it's definitely worth chatting to an agent. And pick your agents. Everyone's wearing the cape in the good time, but it's really hard to have those tough conversations on price and what we're seeing in the market as well. If open homes are, you know, reduced in terms of occupancies as well, that's less people trying to buy your property, and it's lowering the demand. So it's very important.
Correct. You're going to see less and less of those record prices. So if you're a seller, I guess so renters are going to have it tough. If you're a seller, if you've got something to sell within the next 5-year time frame, do it now.
Perfect.
Do it now. And then if you're a buyer and you're looking to invest in the market, there is actually some good buys out there at the moment. I'll give you one quick example. Lakewood Drive in Daisy Hill. Rents for $8.95 a week, and we've got it on the market for $8.50.
Fantastic.
Like, it's a good return on investment.
Yeah.
You know, but 6 months ago, it would have been going probably for $900,000, and it would have been, a 1% return. Pretty mediocre. So there is actually some good buys out there, and I think those buyers who show a bit of patience in this market, I think they'll get rewarded. And I think there's some good buys that are coming on this market. So that's what I'd say is kind of the summary of this market. It is a real change. And sellers, if they want to sell their property, are going to have to listen to feedback. You know, they're going to see for sale signs sitting longer, and you're going to see a lot more for sale signs in the market.
Brilliant. Well, that's really good insight. Thank you, Nathan, for your time today.
No problem.
We're going to wrap this up. As an investor, chat to your advisors, chat to your accountants, talk to your local agents, and try find the best solution for your personal circumstances. The markets are slowing. We are seeing this at ground level, and experts like Nathan are a really good indication to point us in the right direction on what we should do when we're holding these large assets like our homes and our investment properties. Next week, we're going to do a quick video with George Souris, the Director of Empire Legal, to talk about the process from signing the contract to the day that the property settles, and also what he's been seeing in the market. So as always, thanks for listening. Subscribe for our next video, and thanks for your time, and thank you, Nathan.